Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate filings into something you can actually understand. Today we are diving into a report from Bausch Health Companies. This one is all about debt, new loans, and basically moving money around. It might sound boring, think of it as a corporate magic trick where they try to end up with less debt at the end. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss this stuff with other people. This report, called an 8K, is dated June 26, 2025. It highlights some major financial moves Bausch Health Companies made through its subsidiary Bausch Lomb. Bausch Health Companies is the parent company based out of Canada, but we'll really focus on their subsidiary, Bausch Lomb. The main event here is that Bausch Lomb made a big splash in the debt market. They issued new secured notes, which are basically IOUs that are backed by some of their assets, meaning that if they don't pay up, the lenders get something in return. Bausch x Lomb, through some smaller companies they own, issued 675 million euros worth of these secured notes. That's a lot of money, and investors were eager to get their hands on them. These notes were sold to big institutional buyers, kind of like selling wholesale instead of retail. These notes follow a detailed agreement, which is called an indenture. This is like a contract outlining all the terms and conditions of the debt. So what are the terms? These notes have an interest rate that floats, meaning it changes over time based on something called RIBOR plus an extra percentage. As of then, it was about 3.875% per year. They have to pay it back in January 2031. To make these notes even safer for investors, Bausch Lomb and many of its other smaller daughter companies are guaranteeing them. Think of it as having many co-signers on a loan. The notes have a specific place in line to get paid back. This is their ranking. They're secured, meaning they have first dibs on certain assets if things go south. They also rank equally with other similar debts the company has. Bausch Lomb has the option to pay back these notes early in some situations. After June 30, 2026, they can pay them back at the original price plus any interest owed. But before that date, it gets a little more expensive for them to pay. These notes also come with some promises known as covenants that Bausch Lomb has to stick to. They can't just take on unlimited amounts of new debt, make crazy investments, or sell off all their assets. These rules are meant to protect the lenders. Like any loan agreement, there are things that will trigger a default. It means Bausch Lomb messed up bad. If they don't pay up, break those promises we just talked about, or go bankrupt, then the lenders can demand their money back immediately. These are all pretty standard terms in the world of corporate debt. Now let's switch gears and talk about another piece of this financial puzzle. Bausch Lomb also amended, which means changed, their existing credit agreement. This is basically a big loan agreement they already had in place, and they're tweaking it. They created a new loan of over 2031. They used the money from this new loan, along with the money made from sending those notes we talked about earlier, to pay off some older debts. They are also getting access to a new $800 million revolving credit facility, which is like a corporate credit card. They can borrow money when they need it up to that limit. The interest rates on these new loans vary depending on certain things, but they're all tied to some benchmark rate plus an additional margin. Here's where it gets interesting, because they had to change some agreements that they had with their lenders about their business performance. They agreed that they can't be too highly leveraged, which means they can't have too much debt compared to their earnings. They changed that level to a maximum net leverage ratio of 5.75 to 1, but it decreases over time. Also, the financial covenant is now triggered when they use at least 35% of the revolving facility. They also loosened up some other restrictions on what Bausch Lomb can do with its money. All these changes give Bausch Lomb much more flexibility in how they run the business. Basically, this whole thing is a big financial dance. Bausch Lomb is taking on new debt, paying off old debt, and trying to position itself for the future. All in all, Bausch and Lomb is really just trying to tidy up their financial situation. To show everyone that they closed off the notes offering with a press release. Actiu egg owl. Let's step back and look at the bigger picture. Bausch Health, the parent company, has been working to turn things around, especially by having Bausch and Lomb focus on eye health products. This move to refinance debt is a pretty standard strategy. By pushing up the payment dates and getting more flexibility, they are probably hoping to make more in profits. However, Bausch and Lomb still has a huge amount of debt, and this whole exercise doesn't address that. Those debts will be much harder to manage if they don't seriously grow their profits soon. All of his flexibility seems like a good deal for Bausch auf Lomb, but it introduces a bigger risk that is a bit harder to spot. All that extra wiggle room in their financial promises and the ability to load up on more debt means they might be tempted to overspend. The key here is to watch if those loosened rules are going to help Bausch Lomb grow responsibly, or if it's going to open them to even more trouble down the road. Alright, that's our breakdown of Bausch Health Company's latest filing. What's your take on this financial shuffle and whether we should be concerned or cheer for Bausch & Lomb's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate filings. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.